Right now, with escalating US-Iran tensions and regional uncertainty, many investors are asking the same question. Is Dubai about to crash? Or is this actually the next major opportunity? And here's the truth, most people won't tell you. Dubai has historically either recovered extremely fast from geopolitical shocks or boomed even harder once stability returns. In January 2026 alone, before the escalation, Dubai recorded 55.18 billion in residential transactions, a record level of strength entering this crisis. So today, I'm going to break this down properly. Not emotionally, not politically, but strategically. By the way, I'm Chris Channer, and if you're considering buying property in Dubai or investing in the UAE during this period, I help people just like you every single week navigate these decisions properly. My contact details are below the video, and you can also download my free Dubai 2026 Buyer's Guide in the description. If you want a calm, data-backed strategy instead of reacting to headlines, reach out. I genuinely love to help you. Now let's get into the data. So what is actually happening? According to my latest research, Brent oil surged close to $80 per barrel. Thousands of flights were rerouted and international buyers adopted a temporary wait and watch approach. But here's what's important. The Dubai market entered this situation from a position of strength. Off-plan accounted for over 71% of activity in January 2026. Luxury villas remain the most defensive segment, and rental yields are still globally competitive. Historically, and this is critical, geopolitical shocks impact transaction velocity, not long-term value. We saw it in the 1990 Gulf War, the 2011 Arab Spring, 2019 US-Iran tensions. Transaction volumes dipped for 1 to 3 months, then normalized. The only major structural collapse in Dubai's history was 2008, and that was leverage-driven, not geopolitical. That distinction matters. Could we see a correction? Yes. The report's scenario modeling outlines 3 possibilities. Scenario 1, contained escalation. The luxury segment is likely to stabilize, potentially dip -5%, and temporary 10 to 15% volume dip. Scenario 2, prolonged tension. Mid-market correction of around 5 to 10% and 20 to 30% of transaction slowdown. Scenario 3, direct disruption. A broad correction of 10 to 20% and market freezes in the short term. Now here's where investors panic, but this is where experienced investors lean in. There's a famous quote that's been used in markets for decades. Be greedy when others are fearful, and fearful when others are greedy. What does this actually mean? When uncertainty is high, liquidity dries up. When liquidity drives up, motivated sellers appear. When motivated sellers appear, pricing becomes negotiable. That doesn't mean reckless, it means selective. It means buying prime assets, not speculative stock, because historically, prime recovers faster. Let's talk about population risk and oversupply, the real pressure point. Now there's another layer to this that we need to talk about, and this is where things become more structural. Dubai's property market is fundamentally driven on one thing: population growth. More people arriving, more housing demand, higher rents, higher property prices. But what happens if uncertainty slows that growth? If tensions escalate further, even without direct disruption, you could see a pause in new expat relocations. Corporations delaying regional transfers, some residents temporarily leaving out of fear, and international buyers adopting a wait and see approach. Now here's where this links to supply. In 2026 alone, over 130,000 units are scheduled for delivery. That is a significant pipeline. If population growth slows at the same time, that supply increases. You get pressure in specific segments of the market, not everywhere, but particularly in mid-market apartment communities, peripheral locations, high-density off-plan areas, and mortgage-dependent buyer segments. Here's how the chain reaction works. Slower population growth, lower rental demand, vacancies increase, landlords reduce rent, yields compress, investor sentiment weakens. Secondary market listings increase, price pressure builds. That's the risk mechanism. And we've seen variations of this before, not from war, but from oversupply cycles. Now, Does that mean the entire market collapses? No. Dubai is not one single market. Prime villa communities with limited supply behave very differently to high-rise apartment clusters delivering thousands of identical units. Luxury waterfront and established villa communities tend to remain supply constrained, but high-density off-plan projects completing simultaneously, that's where velocity could slow first. And that's why I always say, in uncertain environments, location, quality, and developer quality matter more than ever. Because oversupply doesn't hit evenly. It hits the weakest segments hardest. Now here's the critical point. If tensions stabilise quickly, population growth resumes. And Dubai's long-term fundamentals, tax advantages, lifestyle, global connectivity remain extremely strong. But if instability drags on, this population supply imbalance becomes the main pressure driver, not fear headlines. That's the nuance most people miss. Now let's talk about the other side. What happens if tension stabilizes? My research report models a regional stabilization scenario, and the projections are powerful. If the region stabilizes, the geopolitical risk discount disappears. Institutional capital enters, cap rates compress by 50 to 100 base points, property valuations increase even without rental growth. In an accelerated integration scenario, property price growth could reach 7 to 12% annually. Transaction volume could increase 25% year on year, and institutional participation rises significantly. In a major economic expansion scenario, we could see 15 to 20% growth phases. That's not speculation. That's macro modeling based on historical stabilization events. Peace is not neutral for Dubai. Peace is catalytic. During instability, Dubai benefits from safe haven inflow. During stability, Dubai benefits from institutional expansion and regional integration. Defensive upside during conflict, offensive upside during peace. It's a rare position globally. So who should act now? Let me break this down clearly. If you are highly leveraged, short-term flipping off-plan contracts, or dependent on assessment liquidity, this is a cautious environment. But if you are cash strong, long-term focused, targeting prime villa communities, looking at waterfront assets, or buying grade A assets, this period could represent opportunity. But here's the reality. If a correction happens, it will likely be sentiment driven, not structural. And if regional stability follows, Dubai doesn't just recover, it accelerates. My report makes it clear. Regional peace would likely increase institutional capital, increase foreign direct investment, strengthen Dubai's position versus London and Singapore, reduce volatility, extend hold periods, and mature the market. In simple terms, if stability returns, Dubai's next cycle could be larger and more institutional than anything we've seen. So what's the bigger picture? Dubai is not a fragile, speculative frontier city anymore. It has escrow regulation, DLD oversight, US dollar peg stability, global capital connectivity, residency-linked investment, and high rental yields. The 331 plus unit pipeline in 2026 will need absorption, yes. But if a stabilization scenario, absorption accelerates. In a continued conflict scenario, the market fragments. Prime strengthens, speculative weakens. That's how mature markets behave. If you're watching this thinking, should I wait, should I act, should I hold? That's exactly the kind of conversations I'm having with clients. I work with buyers and investors globally who want a clear strategy, not fear, not hype, just data-backed positioning. All of my contact details are below this video. You can also download my free 2026 Dubai Buyer's Guide in the description. And if you want to talk through your personalized strategy, book a call. I'd genuinely be happy to help you navigate this properly. If you found this helpful, like the video, subscribe to the channel, and stay tuned because I'll continue bringing you calm, data-backed analysis so you can make smart decisions in Dubai real estate. Thank you so much for watching, and I'll see you in the next video.